Hey traders, Todd Gordon here, founder of tradinganalysis.com. Hope you're doing well. I haven't done one of these videos in a long time. I've been away focusing on wealth management business I'm covering for my guy Bennett Tyndall, who is on vacation. And yeah, so let's dive in. This is the Rodney Dangerfield of corrections. Before we do, what's going outside of that window right here? First snow of the season here in upstate New York in Saratoga Springs. So it's gorgeous. My kids were out playing in the snow in their pajamas before bed, driving my wife nuts. So fun times. Can't wait for ski season. So listen, this is, I think, the Rodney Dangerfield of corrections, and I'm referring, could be any number of things that Rodney's done, but remember the movie Back to School? Remember this? You're going to love this.
The triple lending.
Hold on. This is, I gotta show you the best part, and then we'll get back on track. There's nobody like Rodney, right? All right, and I'll explain why this is the triple Lindy. So what is going on with this correction in the market, or what is it? Is it the top? Is it a long-term bear market depression that we're going into? The way that I see this is the triple, a triple correction. Okay, this is like PhD level Elliott wave, which a correction, you know, it's going to be really one of three patterns in the Elliott wave theory, and I'll just give you a quick little education, and then we'll get to the takeaway. So there's three main corrections, right? After every 5-wave move in the market, you're going to expect one of three corrections that corrects in both price and time a sufficient amount of the preceding trend wave. Okay, and the three corrections that would take up this acceptable amount again of price correction and time correction is the zigzag, which is down, up, down. It could be the flat, which is down, back up to the old high, or maybe even through, and then back down to the old lows, and then we go. Or it could be a triangle, which is a 5-wave swing, down, 2, 3, 4, 5, and then you go. Okay, so those are the three kinds of Elliott wave corrections: zigzag, flat, or a triangle. That's really it. Okay, if a market does form one of those corrections, but it looks very small, like we have an ABC zigzag here, but if it looks very small in both price and time compared to what we've done in the prior trend wave, which you can't say this little guy right here is enough to correct what we've seen since the 2020 COVID lows. So that's how a correction goes complex. And basically, those of you who have ever spent any time with Elliott might get confused with this whole W, X, Y, X correction. And all it is one completed Elliott wave correction, which in this case is a zigzag, connected via an X wave to another Elliott wave correction, which is again a zigzag, which is Y. So the first zigzag is W, X wave connector, another ABC zigzag in Y, connector X, and then this quite possibly could be the third ABC zigzag, which is going to imply that we're going to do this move down. That is the triple Lindy of Elliott wave corrections, and I'll tell you where this count is wrong. And I don't think this is going to happen, okay? So again, there's 1, there's 2, that's 3. That's the Rodney of Elliott wave corrections. Okay, so I'll show you where resistance is going to come in and where we're focused. So off of the daily down into This is going to be a 1 hour chart. This is all of the B wave, and I'm kind of giving you the gory details here, but this is the B wave that I just showed you. There's a cluster of fib resistance right up into here. There's downtrend resistance from the 2022 highs back here in January. So we have traditional technicals via trend line. We have fib that is forming in two zones here in the S&P from 40.41 to 40.54, and then again, another zone from 41.31 to 41.55. So this is going to be one of two key resistance zones that you need to watch. Okay, we could fail here or here, and again, remember we have the trend line from 22 high right there. Okay, so watch that. And today we did kind of give it up into the close. That news about the Russian missile landing in Poland, very unfortunate. That could be the case. Okay, I don't know. We're coming in with an open mind. The alternate count or the secondary count, which I think is possible, is not the triple Lindy, is just a simple from the 2022 high, A, B, C. That's the low, and we're moving higher. The count has to prove it to us. Getting off the daily, I'll show you how it proves it to us. Off the daily, get down to the intraday. Here is the 5-wave move following an amazing PPI report. And then we've got an ABC running expanded flat and getting a little bit more Elliott wave-esque. If you break to new highs here, that more or less confirms, I think, that that second count I just showed you is in place. This is a flat Elliott wave correction. It doesn't look like it, but it's down in 3, up in 3, and then a diagonal 1, 2, 3, 4, 5. That is a flat correction. That is indicative of a lot of underlying strength. And then you're looking for upside targets in the ongoing wave 3 that could catch a lot of people by surprise. One thing I want to throw in front of you is, you know, looking at these earnings reports, there's something out of FactSet that I found to be very interesting, which is this. Really good report here by John Butters. They put some really good info out here, and I found this interesting. Earnings expectations, I'll let you guys read this if you're so inclined, but the takeaway here is this. So we're about 90% of the way through reporting of Q3 earnings. 69% of the companies are reported. Actual EPS beat is on average 77% of the companies on a 5-year average beat. EPS estimates 10 years 73. We're at 69, so we're shy. This is not so good. The average price response, I should say, the amount that the actual earnings estimates exceeds expectations is 1.8%, which is below 8.7 on the 10-year and 6.5. 8.7 on the 5-year and 6.5 in the 10-year. So we're only beating by 1.8%, which is below what we'd normally beat. But what I find interesting is here, right here. Companies that have reported positive earnings for Q3 have an average price increase of 2.4%. 2 days before and 2 days after earnings. This percent increase is much larger than the 5-year average of 0.9% in the 2 days before, 2 days after. In fact, if this is the final percent for the quarter, it will mark the largest average price increase for S&P 500 companies reporting positive EPS surprises for a quarter since 2014. One example is Netflix. They reported $3.10, expected $2.14. And the stock is up 16%. So what they're saying there is companies that are only beating by 1.8% estimates, but they're having a 2.4% upside price response compared to 0.9%, which is a historical average, which I find to be very interesting. Another chart that I want to put in front of you is if you look at forward expectations for earnings, here is Y charts. You know, this is in purple is S&P 500 EPS. So for Q2 of 22, second quarter this year, they made $42.74. We're almost done with Q3 earnings. We still have some big ones tomorrow. You could see that the expectations in orange are for future EPS. So you're looking at expectations for Q3 of $45, and I'm looking at this number right here, $45 a share, Q4, $48 a share, and then expectations for 23, we're at new highs for EPS. Okay, and then I can put operating earnings per share in there as well. Same deal. You know, operating earnings at 46-ish right now. You can see operating earnings are expected to increase drastically. So I think expectations are solid. I think there's developments in the macro market. Interest rates have come off the highs. Longer into the curve has kind of shed the 4 handle, down on a 3 handle with the 10-year yield, 30-year yield, even the 5-year yield. The short term is still up there as Fed funds is going to go up to obviously 4.25, 4.5. We'll see where terminal Fed funds is. But I think combined with that earnings response, based on what I said, earnings surprises are being rewarded in this market. We're seeing a lot of squeeze. We're seeing some rotation into semis, consumer discretionary, and there's some long-term work we just did in the members video showing the growth to value, long-term relationships, consumer discretionary to staples, and you know, it kind of gives me sort of leaning towards the bullish count. And I have money on the sidelines in the wealth management, and we have hungry customers at Trade Analysis ready to go for long side. So hopefully that helps, guys. Check us out. Bennett will be back at Trading Analysis. I'm keeping an eye on things. I have the wealth management going as well, kind of all over the place. So hope you guys are doing well. I'll put the snow back up for you. Anybody who's Florida or California, you're missing out. No, kidding, we're missing out. All right, guys, have a good night. And tomorrow, YouTube live stream, 8:45-ish. We'll see you there. Have a good night.